It's good to be here. Eric, Dante, very good to see you here in person at the festival. We're switching up from green now to digital currencies. Today we're going to talk about what stays, what goes, and what grows. What a mouthful, I know, so sorry. In digital currencies. And what we're going to do is to reflect on what has happened this year in digital assets, and to hear your predictions on how the landscape is going to look like in a few years' time. So I think this year what we have witnessed was what is commonly known as a crypto winter. But I like to think that this gives some rise to perhaps a stablecoin spring. And just to push the floral analogy a little further, since we're on the green stage, what use cases, Dante, do you think will bloom now and later?
Yeah, well, first of all, Joe, it's a great pleasure to be here, finally in person.
Yes.
I've been at a lot of Singapore fintech festivals virtually, and there is no substitute to being here in person. So, yes, I do think we're entering the spring of digital assets for two reasons. The first is that you needed the deepest, darkest, coldest phase of crypto winter to find out who had endurance and who was actually staying true to what the original premise is about this innovation. The breakthrough of crypto is not the technology. It's native in the idea that global democratic access to financial services is a human right, and now the technology stage is set for the tech to fade to the background and the outcomes to start becoming possible. We've seen that with Circle's own event recently in San Francisco, Converge, not quite at the scale of a Singapore fintech festival, but more than 2,500 people showed up, focused on utility value, and what does it mean for always-on trusted digital dollars that you can transmit with the speed, the trust, and the confidence with the way we share information. So I think next spring, and what you could count on for the long run is that that stays. And what goes is obviously the speculation phase.
And on that, Eric, just wondering if you had any thoughts to share on that stablecoin spring and crypto winter?
Sure. And first of all, so congratulations for getting your license in Singapore. I think it's great news for Circle. We're all here because we have a strong belief that not only the tech, but what is built upon the blockchain technology can really change people's life in a positive way by giving back empowerment and better control. Talk about human rights or basic rights over your money, your data, and identity. And I think to get to the mainstream and bring that technology over, it's very important to build bridges between traditional fiat and traditional instruments and the digital world. And I think this is where stablecoins play a very big role. They connect the two worlds, and they enable people to stay in the crypto world and go back to some form of stability. We've seen with the last few months that fiat currency is not always as stable as we want to, but that's at least a reference point. So for me, this element that bring stablecoin really helps us connect the two worlds. And they enable movement of value at a much faster and cheaper way. As an example, we're seeing a lot of the traditional network company like Visa experimenting using USDC as a stablecoin on Ethereum and other protocol to settle across the world. And we piloted with Visa last year, and we're going to expand this program in the coming weeks. So there's a lot of great value that stablecoin brings, bridging, fast settlement, and being able to participate in this economy and go back and forth between more volatile assets and more stable assets.
And on that, I was wondering what Dante would have to say about, Web3, DLT, and the emergence of, say, some fiat rails on those very same technology bases. For example, we have now some experiments in CBDC, but CBDC, coming to that later, gathering your thoughts on DLT, please, and Web3.
Yeah, I mean, I think, once upon a time, bankers like Jamie Dimon would have said to anybody at JP Morgan, if I catch you trading Bitcoin, you will be fired on the spot. And my message to the market and the world is, a Google spreadsheet on Amazon's cloud is not a blockchain. The premise of the technology is openness and interoperability. Because you're now building another layer on top of the internet, which is this concept of Web3, where in Web 1 you could read content, in Web 2 you could read and write content, in Web 3 you could read, write, and own. The feature, the only way that that becomes possible is in a world in which the technology is not proprietary and closed to a single actor. It has to be open. But now to say that it is here to stay, I would argue it is. And I think it's very, very, very evident in Singapore FinTech Festival and the sheer amount of energy and enthusiasm. And just to add to Eric's point, there was a recent survey. Something like 75% of all of the retail merchants and retail operators around the world are just this shy of accepting crypto as a medium of exchange and a medium of payments. And so that kind of breakthrough starts to allow the technology to fade to the background and the outcome to become the issue. When was the last time we spoke about the hardware and software that makes the internet work?
Yeah.
And so I think crypto is just shy of that exact stage.
And when you say crypto is just shy of that stage, Eric, what do you think is going to bring us, say, to the next paradigm shift, you know? And I think we have better audio here.
Oh, sure.
And do you think that for financial inclusion, are we seeing crypto as a real means of enabling that? What sort of crypto? Traditional crypto? It's strange that we say traditional crypto now, but traditional crypto, stable coins, other digital currencies. Your thoughts on that?
Sure. So let's step back a little bit and look at how the space has grown, let's say, in terms of users. If we look at, let's say, January 2021, the space had roughly about 100 million users globally. A few months ago, we were about 350 million users. So another 250 million users joined the space in less than 2 years. Most of these came because they wanted to get exposure to the space, mostly through financial services or trading. But for us to get to mainstream, to full ubiquity of usage of cryptocurrency, billion users, 2 billion users, new use cases needs to be built that are connected to this liquidity base, but will drive the next growth. And those use cases are going to be powered by Web3. I agree with Dante, it's a complete paradigm shift that we're seeing with Web3, when users have actually full ownership of their assets. When they make a contribution to a network, they get the value back. And compared to Web 2, users are the product. In Web 3, they have control, and they get the return for their labor, their contribution, whether they engage with a brand, whether they engage with a fan or a collector. So for me, if we look at those use cases, they're going to be primarily around two domains. One is the GameFi side, so gaming, 3 billion MAU globally, a lot of experiment in the field, and where Web3 is very powerful. Where you work in a game, you actually now can own the asset, move it to another game. You own your identity as well. And that would lead to the second use case, which is social network powered by Web3 and blockchain. I think for me, those two will drive the next wave of adoption. We don't know yet which one is going to be successful. There's a lot of experimentation happening, but it will happen. I think this is where we get to 1 billion and more. And digital currency are just here to power these economies, whether it's just to transact value that you have created on the platform, whether is it to incentivize you to participate in that network, or is it a way for you to provide governance, make a decision on the future of the protocol that you are on. Transaction, incentives, and governance. This is how digital currency will power Web3 use cases that will bring us to 1 billion, 2 billion users.
But I wonder, when we say financial inclusion powered by Web3, powered by stable coins, there is still that missing element, or still that gap there that needs to be addressed regarding just digitalization, say, of foundations like identity, for example, or just access to that. So Dante, any thoughts on how actually that gap can be addressed before we bring in the layer of payment solutions?
Yeah, well, in many ways, that's the base layer issue.
Yes.
If Web3 is building a house, the foundation of the house is internet connectivity, step one, and step two, obviously, the presumption of privacy preservation, and identity verification and authentication. We have to remember, we live in a world with billions of people on the margins of the formal economy and the margins of being banked. roughly 1 billion people around the world have no form of ID that would be recognizable by traditional know your customer screening in banking.
Yep.
But yet, roughly 1 billion of those people have access to low-cost internet-connected devices. And so I think the normalization of digital currency-based payments and the normalization of blockchain finance, and we see this with USDC.
Yeah.
USDC is available in 191 countries. In the span of 5 years, there is no comparable banking or money movement network on the planet that has that much coverage. The reason that much coverage exists is because you're leveraging the innovation of mobile telephony and mobile data. You're leveraging the very basic cost of basic internet-connected devices, and now you need to build on top of those all of these other layers of financial access, of rights ownership, and of representation of digital scarcity as something that can accrue to individuals as opposed to accruing to large companies, big techs or public institutions alike. And I think those connections are already happening. And frankly, a lot of people who are skeptical of the crypto case study on financial inclusion are not paying nearly enough attention about what is happening in emerging and developing markets. In these markets, people want access. People are more connected and more thoughtful about enfranchisement and empowerment and agency than being at the mercy of a traditional banking system that has left them forgotten for about a century.
Indeed. And that actually brings us to empowerment and how CBDCs, if not CBDCs, I know, Dante, you have a controversial, by now controversial, CBDC article that's circulating in LinkedIn. I've witnessed the debate on this, it's quite phenomenal. But going back to Eric, on what do you think is the use case for CBDCs, specifically retail CBDCs, versus, for example, a synthetic CBDC, and then versus a stable coin? We now have Orchid, which is our phase 1 research. If you had not gotten your Orchid vouchers, please, this morning when I put some into my wallet, I saw that there's still quite a lot to claim. Go to the Orchid booth and try it out. It's quite interactive. So coming back to you, Eric, on those use cases, are they enabling things that stablecoins may not?
Dante, correct me if I say something wrong on this topic. I think just maybe elaborate a little bit more on the financial inclusion part.
Yes, please.
I think we do have some infrastructure with internet now, and it's being more and more accessible, and then smartphones. I think those are the two key things that you need. Mm-hmm. But we have a lot of work to abstract the technology, make the UI UX simpler for more people to use it. I think that's a very important point, and we'll see whether stablecoin, CBDC, and governments can help on that front. Beyond the experience, the UI UX, and abstracting the technology, we also need to look at how do we bring value through these experimentations. So when you look at stablecoins versus CBDCs, stablecoins will be open source, they will be movable, and today the way I look at CBDC, they're going to be a little bit more purpose-bound for specific use cases. Yep. I don't see an issue having the two living together. They have different properties. And I think it's great for government to experiment with this because it educates people on the use of digital currency in general. But it will be different. And people that needs different type of access or different properties, whether it's trustless, decentralized, or backed by government, will choose. And it's great that we offer the options for customers. I think at the end of the day, that's the right approach.
So your take is on variety. Variety is, that's so Eric, right? Variety is something that you advocate. I'm going to unleash Dante now. But given that we have 10 minutes, I'm going to ask you to do that in 5 minutes, and then we'll go to some questions.
Sure. Well, look, I don't have more to add. I do think the variety point is the right one. Is that when the lights are out, it's good to have physical cash. It's also good to have the choice. And for so many people, they don't necessarily have choices in terms of how they're being banked, whether they're being banked, and whether the banking options they have cross borders. And so therein, I think, is one of the biggest gaps with central bank digital currencies. And my analogy, which some of my colleagues in central banking don't necessarily like, is that aviation safety authorities do not fly planes and build jet engines. They establish the minimum safe conduct in the skies. And I think we, around the world, are the beneficiaries of financial services innovation. And I guarantee you this conference wouldn't be nearly as packed if the central banks of the world decided to compete with retail banks, as opposed to presenting optionality in the financial system. That's the point.
I see. So now taking that point a little further and taking Eric's variety point, does that then leave some room for, say, a smaller scale retail CBDC to operate alongside other privately issued stablecoins that would, say, present more prominence in the market?
Well, here too, if for example, the role of central banks is to be the invisible hands that protect monetary policy and monetary sovereignty, then the very second you break the air gap between the central bank, the banking system, your wallet, and how you spend money, you now have a form of money that is not censorship resistant, not privacy preserving, and then effectively will create, in my view, the central bank has to now make a 100-year technology bet in the face of all of the revolution and the fintech Cambrian explosion that we're celebrating here at Singapore Fintech Festival would have to stop at some level. And so I do think the prevalence of retail CBDC is the most dangerous form, which is why you're seeing from many democracies around the world that are exploring CBDCs, the idea that it would be a wholesale payments innovation as opposed to a retail one. There's too many boundaries on privacy there.
And for more, you can check out his LinkedIn page. There's a whole debate right there. But I'd like to have at least 2 audience questions because they have taken the trouble to put this in. I think one interesting one is, if Eric, you could take this, how will stablecoins interact with tokenized bank assets? How would they interact with each other? And I suppose what's the symbiotic relationship between them?
Got it. Actually, I wanted to introduce a third option. So we've talked about CBDCs, retail CBDC, hopefully contained, not too broad. But I think they have some usage, privately issued stablecoins.
Yeah.
But we haven't talked about tokenized deposits. And I'm not so sure whether this is the question here.
Yes, it probably will fit in, yes.
Today, the way we run the safest stablecoin out there is having that one-to-one matching and then allowing only investments in permissible instruments that are fairly safe. But that's not the best use of capital. If you look how we've powered economies across the world through the banking system, I mean, banks do provide values to the country and to the citizens, is by allowing people to lend those funds out in a highly regulated environment with controls and thresholds. When we have a one-to-one privately issued stablecoin or even a CBDC, we lose a bit of that power to grow economies. And that's what bank deposits are. And tokenizing those will unleash trillions of value. But at the same time, each bank will have their own tokenized deposit.
Yeah.
And there was a time in the US where banks were issuing their own money, and it didn't end very well. But it's a powerful concept because it's a better use of capital that can really power economies. So I think there will be a space for that, but it's going to be tough for banks. It's a complex industry we're in that evolves extremely fast. And being able to agree together to have issuance and redemption in common platforms so you can use it, it's going to be a challenge.
Yeah. And I do think that in time to come, we will see some more progressive banks rise to that challenge. And then Eric will get to keep his variety. But taking just one last question, and I do think there's a question here on for USDC, which says recent turmoil in the crypto market as some stable coins have lost their peg. So I'd like to call some of these things unstable non-coins, something like that, right? What makes USDC different?
Yeah.
And is there any future for non-payment stablecoins?
Yeah. Well, so the category I call stable in name-only coins.
Okay.
And candidly, it's a term of art, like much of crypto and much of the jargon in crypto. It is a term of art that it's a little too easy to create comparable named products when the real distinction lies in how they're built. And so my joke about USDC is that it's great to see many so-called stablecoins embracing transparency and sunlight. We were born in it. And as a company, Circle took the hard road. We licensed the business comprehensively in the United States for money transmission, so on a level playing field as a company like PayPal. And since day one, since the very first USDC was issued, we have followed a model of trust and transparency. I call it the Jerry Maguire test. If a stablecoin issuer cannot answer, show me the money, then it's very likely there's something to hide. And we really do embrace this high standard of operating transparency. But that's not enough. Yep. You also have to have a high standard around the cash reserves and the reserve model. We recently issued a paper that showed that Circle in USDC is operating at a prudential standard better than the top 10 global systemic financial institutions on the planet. So USDC today is comprised of dollars and of US Treasury obligations in the care, custody, and control of the regulated banking system of the United States. So it's a fundamental expression of the trust people have in dollars and the trust people have in rule of law and of the American banking system. Now our view, and this is why the announcement today of the licensing in Singapore, is can you express that trust in similarly guarded, similarly protected jurisdictions around the world so that this innovation can start to enjoy the type of variety and options and choices that Eric described.
And now that you have put Tom Cruise on everyone's minds, I'd like to bring the attention back to Eric and give him the last word on this topic of digital currencies, what goes, what stays, what grows. And Eric, your key takeaway on this subject, a prediction of sorts for the next couple of years, how will this trend grow?
I think to rebound a bit on the last question, there are some hard lessons from the last few months as an industry and for users, regulators, stakeholders, that there are different categories of assets with different level of risk. And it makes it paramount for us to invest in education. We can't generate financial inclusion. We can't empower people across the globe to take control over their assets, their data, their identity, if we don't provide the means to understand what it means and what are the different type of assets, their benefits and their risk. So at Crypto.com, we're investing a lot in education. Today, we just launched Crypto.com University, fully integrated in our app that now have 70 million customers globally, explaining some of this basic concept, testing our users on their knowledge and training and providing that content. I think if we want everybody to be empowered, we need to provide the material for them to do so. And then we can build on that foundation and bring those Web3 use cases on gaming, on social networks that will have tremendous impact, positive impact for societies.
And you only learn by doing, which is, again, another plug for Orchid, what we're doing with Orchid, learning by doing from Ubin to Orchid and beyond. Thank you so much for joining us today in this conversation. It's so good to see both of you. And thank you also all for your attention.
Thank you.
Thank you.